Question 986. For a lease to be properly recorded, the lease agreement must be acknowledged by the A. Lessor, B. Lessee, C. Attorney for the lessee, D. Escrow officer. Correct answer is A. Lessor. To answer this question, we need to understand the purpose of acknowledgement in real estate documents, especially for recording. For a document to be recorded in public records, like at the county recorder's office, it typically needs to be acknowledged. Acknowledgement is a formal declaration before a notary public or other authorized officer by the person who signed the document, stating that they signed it voluntarily and for the purposes stated therein. The primary purpose of recording is to give public notice of an interest in real property. A lease conveys an interest in real property from the lessor, landlord, to the lessee, tenant. The act of leasing burdens the lessor's fee simple interest with a leasehold estate. For a lease to be publicly recorded, the signature of the party conveying or encumbering the property interest must be authenticated. This provides constructive notice to future owners, while the lessee also signs the lease to agree to its terms. Their signature generally does not need to be acknowledged for the purpose of recording the document itself, as they are the party receiving the interest, not conveying or encumbering the fee simple title. An attorney might prepare the document, but the party themselves, or an authorized agent with power of attorney, must acknowledge their signature. An escrow officer facilitates the transaction but does not typically acknowledge signatures, a notary public does. Therefore, for a lease to be properly recorded, it must be acknowledged by the lessor. Question 987. When a leased property is sold, any leases with existing tenants are A. Automatically terminated, B. Breached by constructive eviction, C. Binding on the new owner, D. The leases are renegotiated by the new landlord and tenants. Correct answer is C. Binding on the new owner. When a leased property is sold, the general rule in real estate law is that existing, valid leases remain in effect. The new owner steps into the shoes of the previous landlord. A lease creates a legal interest in the property. When the property is sold, the new owner typically takes title subject to any existing encumbrances, including active leases. The new owner becomes the successor in interest to the original landlord. They inherit the rights and obligations under the lease agreement. This means they must honor the terms of the existing leases, collect rent, and provide the services agreed upon, until the lease terms expire. Tenants generally have the right to continue occupying the property under the terms of their original lease, even if the ownership changes. Leases are contracts and are not automatically terminated by a sale unless a specific clause in the lease allows for it, which is rare in standard leases. A sale of the property itself does not constitute constructive eviction. Constructive eviction occurs when the landlord's actions make the property uninhabitable or unsuitable, forcing the tenant to leave. While new landlords and tenants can choose to renegotiate, they are not obligated to do so. The existing lease terms remain legally binding. Question 988. The Smiths are anxious to buy a new home that just came on the market, but they haven't yet succeeded in selling their current home to pay for the new one. Which kind of loan would they probably not want to obtain? A. Swing loan, B. Conventional loan, C. Gap loan, D. Bridge loan. Correct answer is B. Conventional loan. Swing loan, also known as a bridge loan or gap loan, is a short-term loan that bridges the gap between the purchase of a new home and the sale of an existing one. It allows buyers to purchase a new home before selling their current one, using the equity in their current home as collateral. A conventional loan is a mortgage loan that is not backed by a government agency such as the FHA, Federal Housing Administration, or the VA, Department of Veterans Affairs. Conventional loans typically require a larger down payment and have stricter qualifying requirements than government-backed loans. Since the Smiths haven't sold their current home, they likely don't have the cash for a large down payment. A conventional loan is a less desirable option. Question 989. If an agent refers a client to an in-house lender, she must their affiliated business relationship. A. Disclose that affiliated business relationship. B. Ask the in-house lender for a bonus for the referral. C. Both A and B. An agent can make no such referral to an in-house lender, because it would be a conflict of interest. Correct answer is A. Disclose that affiliated business relationship. If a real estate agent directs a client to an in-house lender, a legal obligation arises. This is because the lender shares an ownership or financial interest with the agent's brokerage or related entity. Such referrals are governed by the Real Estate Settlement Procedures Act, RESPA. RESPA allows for such affiliated business arrangements, but it requires that the agent disclose that affiliated business relationship. This disclosure must be in writing and provided to the client at or before the time of the referral. It must inform the client of the nature of the relationship. They are not required to use the affiliated service provider, and provide an estimate of the charges. This disclosure allows the client to make an informed decision about whether or not to use the referred service. Question 990. According to the Truth in Lending Act, TILA, it is not necessary to disclose the finance charges for a loan involving A. One business buying up the inventory of its failing competitor, B. Remodeling a living room, C. Buying grain to plant crops, D. Both A and C. Correct answer is D. Both A and C. The Truth in Lending Act, TILA, primarily applies to consumer credit transactions. It's designed to protect individuals in personal, family, or household credit situations. TILA generally does not apply to credit extended for business, commercial, or agricultural purposes, regardless of the amount. Remodeling a living room is a consumer transaction for a personal residence, so TILA would require disclosure of finance charges. Question 991. Which of the following is not a tool used by the Fed to regulate the economy? A. Manipulating interest rates. B. Regulation of the secondary mortgage market. C. Open market operations. D. Reserve requirements. Correct answer is B. Regulation of the secondary mortgage market. The Fed influences the secondary mortgage market through monetary policy, but it does not directly regulate it. Fannie Mae and Freddie Mac, which operate in secondary mortgage market, are regulated by the Federal Housing Finance Agency, FHFA. However, by raising or lowering interest rates, the Fed can slow or stimulate economic activity and control inflation. Open market operations relate to the Fed buying or selling treasury bonds to increase or decrease the total supply of money and also affect interest rates. Reserve requirements determine the level of reserves a bank must hold in comparison to deposit liabilities. This affects how banks make loans, a key element of the economy. Question 992. The following are safety precautions that agents should take, except A. Arrange for new clients to meet them at properties instead of the agent's office. B. Advise sellers to remove valuables from their homes before showing them. C. Whenever possible, work with another agent while showing homes or holding open houses. D. Keep their office informed of their whereabouts and schedule. Correct answer is A. Arrange for new clients to meet them at properties instead of the agent's office. Advise sellers to remove valuables from their homes before showing them. This is a valid safety and security precaution. It helps prevent theft or damage to the seller's personal belongings during open houses or showings when numerous people may be entering the home. Whenever possible, work with another agent while showing homes or holding open houses. This is a recommended safety precaution. Having another person present, especially during open houses or when meeting new clients, provides an extra layer of security and a witness. Keep their office informed of their whereabouts and schedule. This is a recommended safety precaution. Letting someone know your itinerary, who you're meeting, and your expected return time is crucial for accountability and safety in case of an emergency. Arrange for new clients to meet them at properties instead of the agent's office. This is not a safety precaution. In fact, it's generally considered an unsafe practice. It's much safer to meet new clients in a controlled environment like the agent's office or a public place first. This allows the agent to verify the client's identity and establish some rapport before going to a potentially isolated location. Meeting directly at an unfamiliar property, especially a vacant one, can put the agent at greater risk. Question 993. When a property is purchased, a copy of the pest control report must be delivered to the A. Bureau of Real Estate, B. the State Attorney General, C. the Structural Pest Control Board, D. Center for Disease Control. Correct answer is C. the Structural Pest Control Board. When a property is purchased, a copy of the pest control report, often referred to as a wood-destroying pest and organism inspection report, must be delivered to the buyer. This is a crucial disclosure document that informs the buyer about the presence or absence of wood-destroying pests or organisms and any related damage. However, the question asks which entity receives a copy from the options provided. In many states, including California, the pest control company that performs the inspection is also required to file a copy of their report with the state's regulatory board for pest control. This board oversees the licensing and activities of pest control operators and maintains records of inspections performed by their licensees. Question 994. While performing the duties of a listing agent, a real estate broker is liable to third parties for A. his own unlawful acts, B. acts performed by a cooperating broker who is the seller's sub-agent, C. only written contracts made under the authority of the principal, D. illegal actions committed by his or her principal involved in the transaction. Correct answer is A. his own unlawful acts. While a listing broker may have some responsibility for a sub-agent's actions, this is not a blanket liability. Liability typically arises if the listing broker knew or should have known of the sub-agent's misconduct or negligently supervised them. Importantly, a broker's liability extends beyond written contracts to include misrepresentation, negligence, and other wrongful acts. Conversely, a broker is generally not liable for a principal's independent illegal actions, unless they participated in, knew of, or should have known of the activity. Fundamentally, brokers are always liable for their own illegal or negligent actions, regardless of their role. Everyone is responsible for their own conduct. Question 995. Mayor Magruder cast the deciding vote on a zoning decision that made it impossible for a nightclub on a certain street to continue to operate. The zoning change forced the nightclub owner, Oscar, to sell the property. Knowing that, the mayor instructed his broker to offer a lower than market rate price for such a property, which Oscar reluctantly accepted. If Oscar discovers the mayor's role in passing the zoning decision, and can prove it to the court, it is likely Oscar can have the contract declared void according to the legal doctrine of A. duress, B. fraud, C. misrepresentation, D. the contract will be considered valid no matter what Oscar argues. Correct answer is A. duress. Duress involves unlawful pressure or coercion used to force someone to enter into a contract they would not otherwise agree to. In this scenario, Mayor Magruder used his official position to create a situation, the zoning change, that forced Oscar to sell his property. Then, knowing Oscar was in a vulnerable position, the mayor took advantage of it by offering a below-market price. This constitutes economic duress. The key element here is that the mayor used his power to create a situation where Oscar had no reasonable alternative but to sell, and then exploited that situation for personal gain. This is the essence of duress. Misrepresentation and fraud apply only when someone is led into making a contract on the basis of false information, not applicable on these facts.